Imagine you wake up, check your portfolio, and see a number you haven't seen in years. BNB, the cornerstone of the entire Binance ecosystem. The token that powered 1,000 altcoins and promised a decentralized future has just shattered. It's not a dip, it's a collapse to a critical floor. As of November 3rd, 2025, at 11:24 a.m. UTC, BNB is no longer the titan we knew. It's trading at a staggering $1.9469 USDT, a full 7.03% plunge in a single day. This isn't just another red candle on a chart. This is a fundamental crack in the foundation of one of crypto's most formidable empires. For anyone holding BNB, for anyone building on the BSC, for anyone who ever believed that exchange tokens were the safe, stable bet in this volatile world, this moment is a deafening wake-up call. And if you're watching this, feeling that pit in your stomach as you stare at your screen, I want you to do one thing for me right now. Hit that like button and subscribe. This isn't just about one bad day for one coin. This is a story about the hidden fragility of the entire crypto landscape, a story that will unfold in the coming days and weeks. And you need to be in this community right here to understand what happens next. Because what we're witnessing is the culmination of forces that have been building for months. A perfect storm that was both predictable and, for those who knew where to look, utterly inevitable. This drop below 1010 isn't a random event, it's a symptom. It's the market finally reacting to a series of internal and external pressures that have been slowly squeezing the life out of BNB's dominance. Think about it. For years, BNB was the golden child. It was the token you used for discounted trading fees, the fuel for the most vibrant smart chain ecosystem, the key to participating in launchpad sales for the next potential moonshot. Its value was seemingly glued to the success and growth of Binance itself. But that very strength became its greatest vulnerability. The entire valuation model was predicated on perpetual, exponential growth. It required Binance to continuously onboard millions of new users, for the BSC to constantly attract new and innovative projects, and for the global regulatory environment to remain either ambivalent or outright friendly. But what happens when that growth plateaus? What happens when the user base matures, when the low-hanging fruit of global adoption has all been picked? The engine starts to sputter. And on top of that foundational shift, we've seen a quiet but massive migration happening under the surface of the crypto world. Developers and users once loyal to the BSC for its low fees and ease of use have been gradually diversifying. They're exploring alternative Layer 1 blockchains with more robust decentralization and stronger security guarantees. Or they're moving to Layer 2 solutions on Ethereum that now offer comparable speeds and costs with the added benefit of Ethereum's immense security. The BSC, for all its initial success, began to be perceived as a walled garden, a centralized ecosystem where the fate of your project was ultimately tied to the decisions of a single corporate entity. And in a space founded on the principles of decentralization and censorship resistance, that perception is a ticking time bomb. Then layer on the regulatory pressure. We can't ignore this elephant in the room. The ongoing global scrutiny of Binance has created a cloud of uncertainty that has hung over BNB for years. Every lawsuit, every investigation, every rumored settlement, whether it's from the SEC in the United States or financial authorities in Europe or Asia, chips away at the confidence of institutional investors and long-term holders. They start to ask a very simple, very dangerous question: what is the actual intrinsic value of this token if the ecosystem it powers is under constant legal threat? The answer, as we're seeing today, is that the market is ruthlessly re-evaluating that very question. The tokenomics themselves, once a source of strength, have become a point of contention. The quarterly burns, designed to be deflationary and increase scarcity, are now being viewed through a different lens. In a booming market, burns are a bullish signal. In a stagnant or declining market, they can be seen as a desperate attempt to artificially prop up price in the face of dwindling organic demand. It creates a feedback loop. As the price falls, the burn mechanism becomes less effective, which in turn causes more selling pressure from those who were only in it for the deflationary narrative. This isn't just speculation. We can see it in the on-chain data, in the declining volume of unique transactions on the BSC, in the slowing growth of total value locked in its premier DeFi applications. The metrics that once painted a picture of unstoppable growth are now showing signs of fatigue, and the market is a ruthless arbiter of fatigue. So, as you watch that number, 109.49971 USDT flash on your screen, understand that you're not looking at a simple price correction. You are looking at a market passing a verdict on a business model, on a level of centralization, on a regulatory stance, and on a growth narrative that may have finally run its course. This is the story of what happens when a giant stumbles, and it's a story that has profound implications for every single person invested in cryptocurrency. This is just the beginning of the analysis, and the next part of this story delves even deeper into the specific, real-time triggers that turned this slow, burning fuse into the explosion we see today. So we've established the backdrop, the slow-moving tectonic plates of market sentiment and structural weakness that set the stage for this collapse. But a 7% drop in a single day doesn't happen in a vacuum. It requires a catalyst, a spark that ignites the kind of fear we're seeing right now. The slow burn became a wildfire for a reason, and that reason is rooted in a series of events that unfolded not over months, but over the last 48 hours, cascade of information and market reactions that created a textbook example of a liquidity crisis. It started with what seemed on the surface like minor news. A mid-sized but highly respected, decentralized exchange that had been a cornerstone of the BSC DeFi landscape announced it was initiating a multi-chain expansion. This wasn't just a press release, it was a full-scale migration of its core governance and liquidity incentives to a competing blockchain, specifically naming concerns over long-term ecosystem viability and chain security as their primary motivators. For the retail investor, this might have sounded like corporate jargon. For the whales and the institutional money, it was a flare in the night sky. This was a vote of no confidence from within the very house that BNB built. The immediate reaction was a subtle but noticeable uptick in large wallet movements. On-chain analytics showed a series of transactions, each moving tens of thousands of BNB from staking contracts and cold wallets directly to the order books of major exchanges. This wasn't panic selling yet. This was strategic, calculated repositioning by the players with the most to lose and the best information. They were the first to see the domino about to fall. Then, just as the market was digesting this initial shock, a report surfaced from a blockchain analytics firm that had been tracking the Binance Smart Chain's validator set. The report, which has since been corroborated by several independent developers, highlighted a concerning trend of centralization. It wasn't just that a large percentage of the network's validation was controlled by a small number of entities linked to Binance itself. That was known. The new terrifying data point was a noticeable decrease in the performance and uptime of a significant portion of the independent validators. The report suggested that running a BSC validator was becoming economically unviable for smaller players, leading to a gradual consolidation of power in even fewer hands. This struck at the heart of the network's value proposition, security and censorship resistance. If the validators are all run by one company or its direct partners, is it truly a decentralized chain, or is it just a very efficient, very global database that can be switched off or tampered with at a moment's notice? This theoretical risk became very, very practical in the minds of developers holding millions in BNB-denominated smart contracts. The fear was no longer about price, it was about existential survival. Could their entire application, with all its users and funds, be compromised by a single point of failure? This dual assault, a high-profile project abandoning ship and a fundamental security concern being loudly voiced, created a self-reinforcing feedback loop. The initial selling from large holders began to push the price down slowly at first, breaching key technical support levels that algorithmic traders and trading bots are programmed to watch. Each breach of a support level, like 1Ju50, then 1040, triggered a new wave of automated selling. This is where the human emotion of fear met the cold, unfeeling logic of machine trading. The algorithms, detecting a strong downward trend, began to execute short positions and liquidate long leverage, adding immense selling pressure. This is the infamous liquidations cascade you hear about, and it was in full effect. As the price approached the psychologically critical 1010 level, the order book on Binance and other major exchanges told the story. The buy wall, the cluster of large buy orders that usually sits below a major support level to prevent a crash, was astonishingly thin. It was a ghost town. The usual defenders of the price, market makers and the exchange itself, were conspicuously absent or operating with far less capital than usual. This lack of depth meant that when the final wave of selling hit, there was nothing to stop it. It wasn't a battle, it was a rout. A few $1 million in sell orders were enough to wipe out all the bids and send BNB tumbling through the 1-10 floor like it was tissue paper. And this is the most critical lesson in all of this. Crashes aren't just about people selling, they're about a lack of people willing to buy. The confidence had evaporated. The belief that BNB was a safe asset in the crypto sphere, a digital blue chip, was broken in a matter of hours. The 7% drop is just the headline number. The real story is the evaporation of hundreds of millions of dollars in liquidity and market confidence. This was a bank run on a digital asset, and we all just witnessed it happen in real time. And if you're starting to see the intricate web of cause and effect here, the way a few key pieces of news can unravel an entire ecosystem's valuation, then you need to stick with me, because what comes next is even more critical for your own portfolio survival. The aftermath of a crash like this is where fortunes are truly made and lost. And in the next part of this story, we're going to dissect the exact playbook the smart money is following right now while everyone else is panicking. This is where you separate emotion from strategy, and I'm going to give you the roadmap. Make sure you've subscribed and hit the notification bell, because what I'm about to explain next is the key to navigating not just this crash, every major market downturn to come. So the floor has given way, the charts are a sea of red, and the social media feeds are a symphony of panic, fear, and the inevitable chorus of "I told you so." This is the moment of maximum emotional contagion, the point where the average investor, watching their portfolio value evaporate, makes the most critical and often the most costly mistakes of their trading career. They are operating from a place of pure limbic reaction, the primal part of the brain that screams threat and demands immediate action to stop the pain. They see the price at 1.09 and their mind projects it to 900, to 800, to 0. This is the abyss, and it's terrifying. But right now, while the crowd is drowning in this emotional tsunami, a different kind of activity is taking place in the quiet, data-driven corners of the market. This is where we separate the amateurs from the professionals, the panic sellers from the strategic accumulators. The first thing you must understand is that a crash of this magnitude is not an ending, it is a violent and painful reset. It is the market's mechanism for flushing out excess, for liquidating over leveraged positions, and for repricing an asset based on its new, colder, harder reality. The narrative has changed, and the price is simply catching down to that new story. The smart money isn't trying to catch a falling knife. They are patiently waiting for the knife to embed itself in the floor, to stop vibrating, and only then do they carefully approach it. They are looking for what we call capitulation, the final, exhaustive wave of selling where the last of the weak hands are forced to surrender their assets at any price. We see this in the data. We look for volume spikes on the final leg down, a sign that the last panic sellers are exiting en masse. We look for a stabilization in the funding rates on perpetual swap markets, indicating that the excessive leverage has been mostly purged from the system. We monitor the exchange net flow, watching to see if the torrent of BNB moving onto exchanges to be sold begins to slow and reverse, a sign that selling pressure is exhausting itself and holders are moving their assets back into cold storage, signaling an intent to hold, not to sell. This is the complex forensic analysis happening right now, and it has nothing to do with predicting the bottom with pinpoint accuracy, and everything to do with identifying a zone of value, price range where the risk to reward ratio becomes asymmetrically attractive. Let's be brutally honest, BNB is not going to zero. The Binance ecosystem, for all its current troubles, is still a behemoth. It still has millions of users, billions of dollars in daily volume, and a vast, functioning ecosystem of applications. The question is not about its existence, but about its future scale and profitability. The market has now repriced BNB from a hyper growth tech token to something more akin to a value stock, or even a commodity whose price is tied to the usage of its network. The smart money is now calculating what that new, slower, more regulated future is worth. They are building their positions not on hype, but on cold, hard metrics like the price to earnings ratio of the Binance exchange itself, extrapolated from burn rates, and on the network's daily active users and transaction fees. This is a fundamental shift in valuation model, and this recalibration is incredibly painful for those who bought at the peak of the previous narrative. But for those with capital and patience, this is the opportunity they have been waiting for. They are not buying because they believe BNB will rocket back to all-time highs tomorrow. They are buying because they believe that at this price, the potential upside over the next 18 to 24 months significantly outweighs the potential downside from here. They are trading panic for patience. This is the single most difficult psychological leap for an investor to make, to buy when every fiber of your being is telling you to sell, to see opportunity in the midst of chaos, to have the conviction to go against the deafening roar of the crowd. This is not about being a contrarian for its own sake. It's about being a realist when everyone else is succumbing to narrative. The narrative right now is doom. The reality is that markets are cyclical, and this is the destructive part of the cycle that necessarily precedes the creative part. The weeds are being pulled, the deadwood burned away. This process is what makes the subsequent growth even stronger. So as you watch the price flicker, I need you to ask yourself a very simple question. Are you a part of the emotional crowd, or are you a student of the market cycle? Are you going to let the panic of others dictate your financial decisions, or are you going to have a plan that you execute with discipline? The next 24 to 48 hours are critical when the foundation for the next bull run will be laid brick by brick in the silent, unglamorous act of strategic accumulation. The fireworks of the crash are over. Now begins the quiet, patient work of rebuilding. And if you want to see exactly how this plays out, if you want to understand the specific on-chain metrics and order book dynamics that I'm watching to signal when the coast is clear and the real opportunity begins, you need to stay with me for the final chapter of this story, because I'm going to break down the exact signals that will tell us when the smart money has finished buying and the next phase is about to begin. This is the information you won't find on Twitter, the analysis that separates the spectators from the players. Don't touch that sell button yet, because what I'm about to share in the final part of this video could change your entire approach to market crisis. Hit that like button if you're starting to see the strategy behind the chaos, and get ready for the most important part of this entire breakdown. The dust from the initial collapse is beginning to settle, not because the pain has ended, but because the market has entered a new phase, one defined not by the explosive panic of the first fall, but by a grim, grinding uncertainty. The price of BNB is now trapped in a tight, volatile range, bouncing between 1.05 and 1.015, a nervous oscillation that reflects the brutal war now being waged between the residual fear of the retail investor and the calculated, disciplined accumulation of the strategic players. This is the consolidation zone, the purgatory where assets languish after a traumatic event. And it is here, in this seemingly directionless churn, that the next major move is being secretly programmed. The emotional sellers have mostly been flushed out. Those who were going to sell in a blind panic have already done so. What remains is a battlefield of different convictions. On one side, you have the capitulation sellers, the ones who held on through the initial crash, hoping for a quick rebound, who are now losing their last shred of hope as the price fails to miraculously recover. They are selling not out of panic, but out of despair, a slow, draining realization that their investment thesis is broken and that their capital might be better deployed elsewhere. This creates a constant low-level selling pressure, a drip feed of assets onto the market that prevents any immediate V-shaped recovery. And on the other side, standing firm against this tide of despair, are the accumulators. They are not chasing the price higher, they are providing a floor. Their buy orders are layered in thick, deep walls at these psychologically battered price levels, soaking up every token that the despairing sellers offload. They are the invisible force, the gravity well that is preventing a total collapse into the abyss. This is a game of patience and depth, and if you know how to read the order books, you can see their handiwork plain as day. But the real question, the multi-billion-dollar question that everyone is asking, is what happens next? Does this consolidation lead to a rebirth, a powerful rally that marks the beginning of a new, more sustainable bull market for BNB? Or is this merely the eye of the hurricane, a temporary calm before another, even more devastating leg down? The answer does not lie in a crystal ball. It lies in a relentless focus on three converging streams of data that are unfolding in real time. The first is the fundamental stream, the response from the Binance ecosystem itself. The market is waiting with bated breath for an official response from the company, not a generic corporate "we believe in the long-term value of BNB" statement, but a substantive, detailed plan of action. How will they address the validator centralization concerns? Will they announce a radical new governance model to decentralize control? Will they unveil a massive, ecosystem-wide incentive program to lure developers and users back to the BSC, a multi-billion-dollar war chest aimed at reigniting growth? Or will they remain silent, or worse, offer only platitudes, signaling to the market that they do not grasp the severity of this crisis of confidence? The second stream is the on-chain stream. We are now watching the blockchain itself for signs of life or decay. Are the number of unique active addresses on the BSC starting to stabilize or even grow, indicating that users are returning to the chain for its utility, not just its speculation? Is the total value locked in BSC DeFi protocols finding a bottom and beginning to tick upwards, a sign that capital is regaining confidence in the security and future of the ecosystem? Or are these metrics continuing their slow, steady decline, confirming that the fundamental exodus is ongoing and that the price support is purely speculative, built on sand? The third and most immediate stream is the technical and liquidity stream. We are monitoring the charts for the formation of key patterns. Is this consolidation forming a base, a strong foundation from which a new uptrend can launch? Or is it forming a bear flag, a continuation pattern that signals the market is merely catching its breath before continuing its downward trajectory? The breakout direction from this tight range will be one of the most critical trading signals of the year for BNB. A sustained break and close above 1030 with high volume could trigger a short squeeze and bring a flood of momentum buyers back into the market. Conversely, a decisive break below 995, wiping out the accumulators buy walls, would be a catastrophic failure of support, likely triggering a new, terrifying wave of selling that could target prices we haven't seen since the last crypto winter. This is the inflection point. We are at a crossroads where the entire future trajectory of one of crypto's most important assets will be decided. The narrative is broken, and the market is now a blank slate. It will be rewritten not by hope, but by data, by action, and by the cold, hard reality of whether the Binance ecosystem can adapt, evolve, and prove its resilience in the face of its greatest ever challenge. The story of BNB is no longer a story of unstoppable growth. It is a story of survival, adaptation, and the relentless, unforgiving process of market Darwinism. This is where we separate the projects with real, enduring utility from the ones that were simply products of a bygone era of easy money and irrational exuberance. The next chapter is about to be written, and you have a front row seat. But this isn't just about watching, it's about learning, adapting, and positioning yourself for whatever comes next, not just for BNB, for the entire crypto space that is being reshaped by this event. If you've made it this far, you are no longer a passive observer. You are now armed with a deeper understanding of market cycles, of the psychology of crashes, and of the strategic plays that unfold in their aftermath. You have seen behind the curtain. So I have one final, crucial call to action for you. This isn't the end of your education, it's the beginning. The crypto markets are a perpetual learning machine, and those who stop studying get left behind. If you want to continue this journey with me, to get real-time analysis on these data streams, to be part of a community that discusses these strategies and signals, then you need to take the next step. Go down into the comment section right now and write data, not dogma. Let me know you're here, that you're engaged, and that you're committed to cutting through the noise. And then hit that subscribe button and ring the notification bell, because we are not done. The fallout from this event will create ripple effects across every corner of the crypto universe, from Bitcoin and Ethereum to the smallest altcoin, and I will be here to break it all down for you, to give you the context, the data, and the strategic framework you need to not just survive, but to thrive in the new market reality that is being born today. This is your invitation to become a smarter, more disciplined investor. The choice is yours.